Vivek, for that. Appreciate it very much. You know, just put up this stock, stock called Nureca. That is Nureca. It's up. It's limit up, by the way. It's up, I think, 20% or so, 402. We'll try and have more on this one for you. I think, I don't want to be completely wrong here, but there's a medical devices company called Dr. Trust. That is housed in this business, in this company, Nureca Limited. Doesn't come up on the screen very often. It's had a one-way slide. You know, looking at a long-term kind of chart, the high was in 2021. Actually, yeah, October of 2021 was at about 2280. It sold off all the way. It made a low today, by the way, all-time low at 315 today, and then it's bounced very sharply in terms of trade, the daily trade from yesterday's close. More on this later. Anand Shah is head of PMS and AIF Investments at ICICI Prudential Asset Management Company. He's joining us to take some questions. Anand, great to have you with us here. Thank you very much for your time. You know, what are you making of the earnings which are coming through? You own any of these names? Asian Paints, Havells, PVR, Lever, for example. These are numbers in the last 24-48 hours. And mostly we are seeing earnings estimates, future earnings estimates being slightly brought lower. Your thoughts?
Hi, very good afternoon. Thank you for having me. Yes, you're right. And, you know, generally the discretionary spends was a little bit under pressure this quarter. The way we are seeing earnings season so far that we have seen, I think it's largely in line with expectation. What is changing is, you know, the future expectations are being sort of subdued, and very high valuations on these companies, which was pricing in a lot more in terms of growth and margins. There we are getting some confirmations, but that, you know, it's not to be. And that's when, you know, a little bit of a, what would I say, a negative on that. But otherwise on banking, we are seeing fairly decent numbers in line with expectations again. On IT, again, numbers are decent. So, yeah, more or less in line with expectations as far as numbers are concerned.
All right. Hi, Anand. You know, I was looking at your performance of the fund in comparison to some of your peer group, and you all did quite well in 2022. So congratulations on that front, particularly with regard to the broader markets. Anand, you know, I'm just looking at your portfolio construct, and it appears you all in the camp that believes that metals could have some more way to go. You'll have stocks like SAIL in various portfolios, you have Godavari Power and Ispat, and a couple of other names as well. Could you correct us then? You know, could you tell us, do you believe that some of these metal stocks, they still have some legs to go from here on, given that China's reopening?
Yeah, I think the broader market's been very bipolar. So our 2022 performance has been not owning IT, not owning pharmaceuticals, owning a lot of manufacturing and manufacturing allied, which includes even the corporate banks that have been sort of supporting our view and supporting the fund performance. Coming to metals is one part of the manufacturing leg that we believe would structurally benefit. And again, not unique to metals, but if you go back into the history, last 10, 12 years been very tough for the sector from a macro perspective, and even micro perspective, the businesses had done acquisitions, leverage, run up to the 2007. So I think a lot of cleanup, a lot of restructurings have been done in these businesses over the last 12, 15 years. Balance sheets are now far more stronger. But the good news in terms of tailwinds would be growth in manufacturing in India, which would create demand for metal in India, but also the oversupply situation, which been hurting global metal stocks emerging out of China. That's been, again, expectation is that that's behind us. The pollution clampdown in China will, and obviously the rising cost in China would make sure that they will not be incrementally a large exporter of metals. And even the policy level also, the government doesn't want a large exporter of metals.
Anand, you said that you outperformed the markets by completely avoiding IT in 2022. What's the call on IT big picture for 2023?
So again, long-term and short-term. Long-term, obviously, these are very high-quality businesses. and they would do well. But nevertheless, what happened in 2021, they had, relative to the rest of the market, they had better results, better earnings, a good growth prospect. So not only their EPS did well, but market re-rated them very well. However, with the economy opening up, the IT budgets are not growing as fast as they were growing, because the companies, the clients are also spending more on non-IT. Similarly, the costs are going up. We all are well aware of what's happening on the manpower cost in particular, which again seems to have peaked out. So I think it's more of a short term. We believe beginning of this year, the valuations were expecting something. The street was expecting something. The reality was something different. I think market is coming around and understanding that, the times are getting tougher for these businesses. And to that extent, we have seen a reasonable de-rating. We believe there's some more legs maybe, but we are watching that space.
Watching that space closely. The in your top holdings, there's no real export presence, right? Anand, that's the big kind of takeaway. Or am I wrong in reading the list?
No, so we are
no significant export list. Yeah.
Yeah, so we've been sort of constructive on manufacturing exports. Not that we are, IT services growth will also continue, but I think that is something not new, and to that extent, market have factored in a lot of, growth that we would see in IT services. But manufacturing exports is something, again, we believe structurally should improve from here. I think a lot of efforts been made on that front. We've been also talking about China +1, Europe +1. Again, nothing is happening this year, but if you look into the history and the efforts made in last few years, we believe next 3 to 4 years, the manufacturing exports is something to watch out for. We have some MNCs which are already increasing capacity in India to make India a second base for manufacturing exports. So I think that's something looking out.
Anand, this textile sector was totally ignored. Then many people jumped onto the bandwagon. How much of that is all? I think you'll have a couple of stocks, Vardhaman Textiles in there. Do you believe that there is still room for upside out here?
So again, structurally, China is slowing down. Structurally, the share of China in the global textile export is reducing, but the benefits were not accruing to India. Benefits were accruing to Vietnam, to Bangladesh, and to that extent, the opportunity is there. It's just that India yet has not captured it. I think we've been tracking this sector for very, very long. We've been also owning this sector for a while, and to that extent, India has an advantage when it comes to cotton value chain. Albeit the last year had been a very different year, but nevertheless, over the last many years, India has survived the Chinese competition on cotton front very well. So I think we have a right to win. Opportunity is also there. It is for the individual companies to, make investments and make the most of that opportunity.
The other one is, VRL Logistics, Anand. That's again a play on the manufacturing theme, indirect kind of play. Yeah.
So if you see, when manufacturing suffered, a lot of other sectors also sort of suffered. Utilities for that matter. We did. So of late now we are seeing growth in electricity consumption also. So our portfolios, if you see, they have manufacturing, but there are a lot of manufacturing allied industries like capital goods, industrial products, utilities, logistics, even the corporate banks. They all are going to participate if we were to say that what we believe that manufacturing should pick up from here, not only for the domestic import substitution, but even the manufacturing exports. I think India can have a few years where manufacturing, even a decade, when the manufacturing can do well. And then all of these allied industries should also benefit as they have suffered in last decade because manufacturing didn't do that.
Okay, all right, Anand, we'll leave it there. Have a good weekend. Thank you very much for joining us, and we'll speak to you soon again. Thanks indeed. Well, the market is not doing very much.